Welcome to Trade Ideas. I'm Jake Merl, sitting down with Jannarone, Editor-in-Chief of IPO Edge. John, great to have you back on the show.
Thanks, Jake.
So today we actually have to review on Thunderbridge. You crushed it, man. You were actually up 200% over the past few months on this stock. Can you please walk us through exactly what you were looking at and how things have unfolded over these past few months?
Yeah, sure, Jake. So what happened with Thunderbridge, which is now Repay because the SPAC deal closed, is the warrants looked really cheap. They just weren't getting very much attention. So I saw an opportunity there to get exposure through the warrants, which is risky, right? Because if the deal hadn't closed, they would be worthless. But since then, the deal has closed, and what happened was really interesting. Baron Capital, big long-only fund, came in. They do a lot of small cap stocks, but they have a lot of capital that they're managing. They came in and they said, you know what? Why don't we invest alongside the rest of the investors? But let's get rid of all this dilution from the warrants. So what happened is the warrants got taken out for $1.50 in cash plus a quarter of a warrant. So what I said last time I was on here with you was to hang in there, and it worked out. So the stock is now trading, and the warrants are also trading as well. And it looks like they're worth roughly, if you count the $1.50, $2.40 a share.
And so you originally recommended buying the warrants below 80 cents in April. You then doubled down at 165 or so in May, and now they're trading, like you said, above 240. So given the recent price action and everything we've seen, would you be buying it here at current levels, or would you just be taking profits?
I think in the beginning, I really believe that the business, the common stock, is worth $15 a share. So I still like it. I don't like it as much as I did before. But yeah, you might take a little profit here. But remember, after the warrant announcement came out, the stock, the warrant dipped a little bit, and that's when I said to get back in because it just looked too cheap. I mean, it was worth $1.50 in cash alone, and I saw it dipping below $1.60, and that's when I came on last time and said you should get in it. You should get into it here. So if you see people taking profit, which is I believe what happened last time, there could be another chance to jump along for the ride.
And over what time horizon do you think it'll reach that $15 per share?
I'd say the next 2 years or so. This is not, the company is a steady grower, but this is not something that's going to trade like some of these crazy IPOs that we've seen, like Beyond Meat or anything like that.
Well, John, we'll see how it plays out in months to come. Thanks so much for joining us.
Thanks a lot.
So John is still bullish on Repay. Specifically, he likes buying ticker symbol RPAY at current levels with a target price of 15 over the next 2 years. That was Jannarone of IPO Edge, and for Real Vision, I'm Jake Merl.